Welcome to episode 220 of Wealth Talk. My name's Christian Rodwell, the Membership Director for WealthBuilders, joined today by our founder, Mr. Kevin Whelan. Hi, Kevin.
Hello, Chris. Good to be with you again, my friend.
Yes, and we're just a week away now from our next live networking event, which is up in Birmingham.
Yeah, we've got to get out and about, have we really? And very interesting to meet people who've been followers or members of WealthBuilders for a long time in the Midlands, and but we've never had a chance to say hi in person. So really looking forward to that.
Yes, and the tickets are really flying out, but there's still time. So you can reserve yours. Just head to WealthBuilders website, go to wealthbuilders.co.uk/events, and we'll look forward to seeing you there. Now, Kevin, a couple of weeks back in episode 218, we did a topic which was how safe is your pension? And we had some interesting feedback from that. And in that episode, we looked at an article that was in the newspaper of a 65-year-old gentleman and his pension pot, which did sit at £250,000 just 18 months ago and has now dropped to 163,000. So we talked about the risks, obviously, and being more in control of your pension. And we talked about a few things in that episode, and one of those we wanted to pull out and focus on a bit more today, and that is the topic of salary sacrifice.
Sounds painful.
Well, it does a bit, doesn't it? But then the title of this podcast, How to Boost Your Salary or Pension for Free. So it sounds quite exciting, actually.
Well, it is if you phrase it that way, but you see how pensions pretty much are dreary. You know, go for the snooze button. Oh, Kev's talking about pensions again. Well, do you know what? You can actually make a lot of money from your pensions if you know how to use the tax system. Now, most people understand, Chris, that there's been a kind of a well-publicized, well-documented, well-marketed idea that if you make personal contributions into a pension, you get tax relief, so you pay less income tax. If you make corporate contributions paid from your company, your own limited company, then you'll get corporation tax deductions. And everybody knows that. So it's kind of homespun, and it's like, oh, it's one of those things everybody knows. But there are taxes that are sometimes a little under the radar, that if you could understand there's a link between that tax and your pension, then you can actually make money and find a way to actually genuinely increase your net take-home pay. So I wouldn't say it's increasing your salary, it's increasing your net take-home pay, which is still what everybody wants. It's not what you make. That counts in any wealth building activity. It's what you keep, so you've got to take the tax out of the equation. And the tax that is misunderstood by most people when it comes to this particular secret of how to boost your pension or boost your net take-home pay is national insurance contributions.
Okay.
The national insurance contributions is the secret to the success of understanding that if you can recognize that it's a tax and that both the employer, critically, and the employee pay it, then you can find a way to reclaim some of that, and then that puts more money back in your life. Okay, and that's the secret. And I think, you know, I've seen articles written on it. I've seen pros and cons written about the concept, but it's so poorly titled. It's been a little bit like SaaS, the SaaS, the super high-powered vehicle for anybody who's a director of a limited company. Wow, so powerful. However, the language is too dreary, so most people who get caught up knee-deep in their businesses or in their life, they don't wade through the treatment. They end up ignoring it or going, well, that's not for me, but they don't see the benefit. And this part of the problem with the whole pension industry is the language just doesn't make it very accessible.
Yeah.
So in this concept known as salary sacrifice, you called it earlier on, wow, that sounds painful. I've got to sacrifice something. Well, why on earth, in a world where we've currently got so much uncertainty, inflation rife, interest rates on the up, why would I sacrifice anything? I mean, it can't be a good reason for that. Surely, Chris, you're not telling our listeners they should sacrifice their salary and still build wealth at the same time. You can't be telling me that, can you really?
Well, hopefully we can dig a little deeper into it today. And as with many things when it comes to wealth, there are pros and there are cons, and you need to make the right decision for you based on your own personal situation. But perhaps we just break it down to simple form, Kevin, of what exactly is it? What does it mean? And is it available? Who's it available to as well?
Okay. So joking aside and teasing aside, everybody who has some form of employment, so it's really aimed at employees. Okay. So it's not the SAS aimed for the directors. It's really aimed at employees. Now, when you're an employee, you're trading time for money, but you're creating value inside a business or a company, large or small. And once you understand that when you see your pay packet, you've got national insurance, and your national insurance is a percentage of your pay. But the employer is paying national insurance, and they're paying more national insurance than you are. Okay? Now, currently around 13 to 14% at the minute, if you're an employer. So if you went to your employer and said, would it be, I'm making a pension contribution anyway, and I'm trying to build my wealth. So you have obviously need an intention to be building your wealth. So you've looked at the cost of the scheme, you've looked at the funds, you've watched out for the default funds that I spoke about last time. And so you're happy with the overall pension benefit. You can then say to your employer, instead of paying me this amount of salary, on which both you and I are paying national insurance, if we redirected, so not sacrificing now, redirect some of that salary and pay that into my pension instead, two benefits directly derive from that. The first is technically then you get less salary, so you pay less national insurance. So you could redirect that to the scheme. But if you can build a relationship and understanding of this, and most people don't know their employer's national insurance, and you said to them, the national insurance you were paying on my behalf, for the amount of money I want you to redirect, will you pay the national insurance you're paying into that as well? Okay, so stated differently, say you sacrificed £1,000. Your employer will be paying 13.8% of that money. Now, if you're paid £1,000 less, in salary terms, they're not paying that anymore, the 13.8. So if they paid it, which means you getting into negotiation with your employer, and many employers, if you have that relationship, you're playing full on, you're giving your best, you're having a proper conversation. This is a well-trodden path for many employees to pay less national insurance and get actually that money that they wouldn't have got goes straight to the exchequer. In other words, that money comes to you instead. And employers have no reason not to do that unless they're either too small and they're not paying employers national insurance, or you can't negotiate. But for the most part, you can. So you're exchanging a benefit, a salary for a benefit, but that benefit has got the extra boost of that employer's national insurance. That can kick in. And there are ways, and I won't go into the detail of that because you need a spreadsheet and a calculator, but there are ways that you can work out the numbers so that the net impact is your pension is the same, your pension contributions are the same, your pension value is the same, but you increase your take-home pay instead. So you could do it either way. Obviously, we encourage people to build wealth. That's what WealthBuilders is all about. So we'd encourage that thought process, or even a bit of each. So if you're going to make a bit more money, you could invest some and keep some. So a little complexity in the calculations, and we're more than happy. We've got a team of people, Chris, who can help with that. Obviously, it's independent financial advisors as partners that we work with. Or if you've got one yourself, go talk to them or talk to your employer in case they already know this. They may already be running this for tens or even hundreds of people in your firm.
That's interesting. So just to summarize that, make sure I've got that right then, Kevin. So talking there specifically about the tax and the national insurance savings, which, you know, over time could lead to quite significant savings. But the downside, the opposite of that, is lower monthly take-home pay, which might just impact your shorter-term financial planning.
Yeah, it can do that. Well, let's say it did, and you did the Wealth Builder way. Well, there's some consequence of that. You know, your net take-home pay is a bit lower, but the boost to your wealth is bigger than the difference. Number two, say you were really critical on getting a mortgage and everything depended on what you were declaring as your income, then that would have a bearing. So there are always pros and cons of every action, Chris, and I suppose if you're at close to retirement, there would be some impact on benefits and things like that. So we're not trying to say this is a panacea. We're saying it's one of those tools that you should look into when you're building your wealth. And the earlier you look into it, the better it is. Because if you can take a significant sum of national insurance and reinvest it, and you're happy with the investment, you're going to get compounding on compounding on compounding on compounding. And most people don't take that into account because, as I mentioned earlier on, when people are knee deep in their life, the treacle holds them in, right? And they get stuck, and it also affects their brain. It fogs their brain. They don't see compounding. They don't get it. They understand it, you know, eighth wonder of the world, all that, heard that, Albert Einstein, yeah, compound's a good thing. But they don't really understand the impact of it. Let me give you an example. Chris, let's imagine, I'm going to ask you a question. Imagine we had 100 wealth builders in a room. And I said to them, what would you take? I'm going to give you £1 million check right now, or I'm going to give you a penny and double it every day for the next 31 days. Pick a 31-day month to give maximum impact. What do you think most people would take?
I think most people would probably be tempted by the £1 million check.
They would. But if you do the maths and you compound a penny, then 2p, then 2p to 4p, and you did that consecutively for 30 days or 31 days, the value of that money, Chris, is 10 million. People do not see the vision of how big something could be. Now, of course, I'm not suggesting anybody's going to double their money in a day. Of course not. That's an illustration of an effect that it's just the vision. But do you remember I talked a little while ago about setting up a pension for my grandson?
Mm-hmm. I do.
Right? And 200 quid a month, just reinvested every month and invested in normal stock market return, would make our little Finley a pension millionaire at 50.
Mm-hmm. And that certainly stirred up a storm on some of the social platforms, didn't it?
It did. But listen, the point is it's illustration, right? It's not about me. It's not about you. It's about understanding that compounding can work. And of course, in Wealth Builders, we always highlight you should, we want to empower you. You should make your own decisions about what you do with your own money and how you do it, whether it's pensions for kids, whether it's junior ISAs, whether it's premium bonds, whether it's what do you do with the old child trust funds? Is it an ISA? Is it a LISA? What is it? So many different ways. And we're going to cover that too, aren't we, in Wealth Builders? So for those who want to know more about how we're aiming some of our education specifically at families, Chris, how would they, I know we're full at the moment, but how would they get on the wait list for that?
Yes, head to wealthbuilders.co.uk/families, and you can catch the recording when we launched to find out a bit more about the program and to get your name on the wait list when we reopen in the coming few months. Yeah,
in the new year, right? So, we're going to cover all of that, because the key issue, I think, from Wealth Builders is the distinctions that we have people to make. And you don't have to make every distinction, but if you listen to it, you think about it, you'll find the distinctions you want to make. And I think compounding is one of those, Chris. I wouldn't mind just taking a few minutes of our listeners' time on this, because, it's quite a powerful concept. In fact, it's fundamental to principle number 3 in families, which is planting seeds. And it's fundamental to the whole wealth building process, that you understand compounding. And of course, the big quote on that is, if you don't understand it, you're probably paying for compounding. If you do understand it, you're probably making it work for you. And that's the first point I would say about compounding. Before you even understand what it is, you have to understand it's a double-edged sword. It can work for you, putting money to work where it works, and then it continues to work. So it's building upon building upon building. Like if you had £1,000 in the bank and got 10%, it's going to be worth, 1,100 a year later, and then that reinvested, you get a 10% on the 1,100, so that's worth 1,200 quid or whatever it would be. And you could do the maths yourself. But the magic of compounding is also countered by the malaise of compounding. That's when you allow compounding to work against you. And we see that, don't we? In society, the vast majority of people, compounding is working against them. It's the banks, it's the institutions, it's the lenders who are banking on that compounding. It's compounding in the reverse way, acts as a brake on your finances, and in many cases sends them underwater very, very quickly, which is why I will cover it on another day, Chris. I'll cover why the key things you should understand before you pay off a student loan. Okay, I'm not going to cover that now, but that's another big one that we will be covering in Wealth Builders for Families, as our parents see their children getting ready to go to college and some form of higher education. So the first thing about compounding is understand whether it's creating or cutting, right? Is it building, or are you going below water over it? And that's an easy one to get, right? You can kind of work that out. The second is, what's the cycle of how that compounding works? So in the example I gave you of the penny, that was a doubling every day. That cycle repeated every day. That doesn't happen in life. Seeds don't grow that quickly. For the most part, it's annually. Say if it was interest, might be annual interest or monthly. So you need to understand the cycle. The shorter the cycle, the more you understand that, the more it's likely to benefit you. So understanding the cycle of that. Obviously the rate, what kind of rate are you likely to get? And is that guaranteed like it would be if it was interest, or is it uncertain? Which is where I think most people with their pensions get mixed up, because they hear the stock market is made X money every month or every year, but it doesn't do so on a consistent basis. So as well as the rate, you have to understand, is it consistent or is it inconsistent? And I talked about that last time. Do you remember the risks that people are taking? They don't understand.
Yeah.
I was talking to one of our members earlier on. He said he's had money in the stock market in FTSE for the last 5 years and it hasn't moved an inch. So you're not compounding. And if you get an event that damages or impacts on your money in a big negative way because you didn't understand the risk, like that guy with the 250 turned into 175 in a heartbeat, you can lose money very quickly, and then you lose the impact, the powerful impact of compounding, because you haven't understood that you need consistency for it to work. Now, going back to my grandson, it's contributions that makes a difference there. If Kev pays 200 quid a month, that's every month, that's adding, that's putting fuel into it. So you're no longer worried about whether it goes up or down. In fact, in some cases, when money goes down, you buy more of that asset at a lower price, something called pound cost averaging or dollar cost averaging, depending on what country. You getting the idea?
Yeah, absolutely. Yeah, so multiple layers almost that are contributing towards this compounding.
Yeah, and in the end, we want the compounding to be collected. We want you to bank on that. So the more you can create multiple recurrings with different cycles, different rates, different risks, different approaches, different ways that you can get involved, the more you build your confidence around understanding how these things work, and don't just delegate your money to a third party who's, by the way, getting the compounding, whether you get it or not. Right? Think about that. If you got your money with an institution, who gets paid first?
They do.
They get paid. So they get paid each month, no matter what. So, they're compounding your money, whether they make money for you or not, which is why, very interesting, Chris, we had a few people reached out to us on the SCORE idea we mentioned was it in the last podcast or the one before?
Yeah, episode 218. Yeah.
So we said for our members, we do a free report on these things. They're called a SCORE report. Basically looks into how is your pension working and how effective is it at 5 different levels. And we've still got a little bit of room to do a few more before the end of the year. So if anybody wants to know what likely benefit they're getting, what compounding they're getting, what sort of charges they're paying, that's another thing. There's no point compounding at 10% if you're paying 9% in charges. You're not going to make as much money. So what retirement options you've got, what fund options you've got, and of course, whether you've nominated your spouse, partner, or children as a beneficiary to keep it inheritance tax free, which is another factor. So I can understand very quickly, Chris, that this whole idea of wealth and pensions and different assets and building different layers is confusing and sometimes can get a bit overwhelming, which is why we ask everybody to do one small thing every month. Just a small thing every month. Because if you do a small thing every month, you're going to compound the result for you by adding that action next month and adding that action the month after that. So however small the action, we ask you to take it. And that's the key. So compounding is also about your actions. It's not just about the financial impact. So compounding is very deep, very rich, very powerful when you understand how impactful it is in your life if you can work with it as opposed to it working against you. Anyway, I think we did a bit of a round robin round.
We did,
sacrifice or boost your income and compounding and
Being as we're leading up to Christmas, Kevin, in a festive mood, shall we give away a few more SCORE reports? And if you're listening now and you'd like to really kind of see underneath the bonnet of your pension, we'll do that for you and we'll provide that SCORE report. I definitely recommend you take advantage of this. And it's really simple. Just drop us an email to hello@wealthbuilders.co.uk. Put the word SCORE report in the subject line and one of our team will get back to you and let you know what the next steps are. So you said we've got a little bit of room for a few more, Kevin. So let's offer those out today. And shall we also end with a review? We don't want to miss that out.
I will mention though, I'm just working on a little sort of gift list, some suggestions, the sort of 12 days of, I know we're using the Christmas word a bit early, but I'll be doing something to help parents as well create some little ideas that they can use on the run into Christmas and what they can do to engage their children with lessons which are more valuable than any gifts that they could make of anything else.
Oh, that sounds good. All right. Well, stay tuned for more news of that. But a review this week from Simon, who says, I have known Kevin for nearly 20 years from when I downloaded his first ebook, Save a Fortune Fast. I was impressed that he took the time to contact me directly to find out my thoughts about it. Kevin is a person of great integrity and significant practical wealth and financial knowledge and experience. And our paths drifted apart over the years, but I've always been watching from a distance and seen the creation and growth of WealthBuilders. due to my own changing circumstances, I decided to join WealthBuilders in May 2023 and have been impressed with its structured and supportive approach to wealth creation and growth and the community of like-minded people willing to help. I'm also very grateful for the guidance and support from my wealth coach, Manish Kataria, who is a consummate professional, skilled in financial and property investments, and a really nice chap too. And if you're serious about creating, growing and protecting your wealth and leaving a lasting financial legacy for your family, then I highly recommend WealthBuilders to you.
Very, very nice, Simon. And I do recall Simon, and he also referred me very kindly to other members of his family. And we played golf together originally, way back. Can't remember whether we played well or not, but we're just older now, and I'm sure we'll pick up the clubs again and dust off a relationship. But it's so kind of him to have kept in contact and almost watch from afar. And we often see that, don't we, Chris? We see people who are going round the outside, as we call it, making a decision. And I'm going to leave on a final point, Chris, which is really quite a powerful quote, which I was reminded of recently, which is a Tony Robbins quote. Most people will know Tony Robbins, won't they, you think?
I think so.
Yeah. He said, it's in your moments of decision that your destiny is made. And what a great quote when you think about it. Your destiny is shaped by decisions you make. And all too often, we know, and we sometimes lament it, don't we? We look at each other and go, why 95% of the population still not going to reach security and then independence when there's so much information, there are so many ways to do it, and there's a mismatch between intention and action. And what we hope to do is try and get a few more people to turn that intention into action, as long as we ask them to do something small. So if you've been listening to the podcast for a little while and you haven't done anything, let me ask you to do one thing. Either request a free score report, log on to the family's wait list, or do us a review to say, hey, like Simon did, I'm out there 20 years or 2 years or 1 year, and I'm listening and I'm interested in what you have to say. And one day I'm going to get around to making the decision to choose wealth as to drifting and going around the outside. Because frankly, if you're not building your wealth, you're drifting. We know that. So tell us why you're drifting and we'll do our best to help you, because that's our passion, isn't it? To try and get more people to be set for life and get their children set for life and have the trials and tribulations that our younger people are going to face in an increasingly uncertain and unstable future.
Yep. Good point. Well made. Please do reach out to us, and lots of different ways to do that through the socials. Book a discovery call, head to the WealthBuilders website, wealthbuilders.co.uk. You'll find all of our contact details there. So we hope you enjoyed listening to today's episode. Don't forget to hit the share button, send it to a friend, and Kevin, we'll catch up same time, same place next week.
See you in Birmingham, my friend.